Hi, welcome to Modern Wall Street's Trader Talk. It is Wednesday, and we are welcoming back a crowd favorite, Peter Tuchman from QMS, after his vacay. Peter, how's it going? Welcome.
Good to be back.
Well, after a bumpy road last week, the markets have recovered after North Korea tensions have dissipated, but there's still plenty of headlines surrounding Washington. We have the NAFTA agreements, FOMC minutes tonight, earnings. So who's taking the wheel, Washington or market fundamentals?
Washington's not taking the wheel at all because the market is up and everything coming out of Washington seems negative in my book. And I'm not a political guy, but it just doesn't seem like there's anything really happening there in any kind of a level of functionality. Market's up 70 points. We're at 22,070. Market seems strong. We've had a lot of pressure in oil over the last couple of days. That didn't take the market down. The North Korean instability took the market down temporarily last week because it was really an intraday headline. But you saw by Friday morning, the market had bounced back. Right, we have the FOMC meeting coming out later at 2 o'clock. Apparently, interest rate raises are not really on the table. It's more of the timetable on the spreadsheet, on the balance sheet. And that seems like the market's been loving that. The last couple of times they've talked about it, you're unraveling something into a strength of a good market. That's probably a good thing, right? We had yesterday, you had Home Depot and Dick's posted good earnings, but still stocks got decimated. And so it's always interesting to understand, well, why did that happen? And the work that I've done, asking around some of the people here who I think are smarter than me, is basically that at the end of the day, the customer experience that's happening and the ease of Amazon, whether you're living in Kansas or you're living in New York City, that Amazon is eating everybody's lunch at this point. And so that really had some bearing on why Home Depot and Dick's got hit yesterday. Today, Target earnings came out. They were better, and that stock is going higher. So, retail's been under a lot of pressure, and retail can take a market up or down. And it seems like today it's contributing to that. Also, with the market not breaking, you're at these high levels where there's obviously short interest in the market at every level. There are guys who are probably still short at 18,000 and have been putting it on everyone. It's your risk-reward level. How much pain do you want to take betting the market's going to go down in a market that never goes down? So once again, at 22,000, I'm kind of sure that there are people who have made the bet, gauging from North Korea, from what's happening in Washington, that this market will break, and it's not breaking. So those people may be covering back here. This market just doesn't stop.
Peter, you mentioned a lot of good points there, including the FOMC minutes, Amazon eating people's lunches, retail is up today, as you said, on short covering. So do you see long-term strength in retail, or is there any sector that maybe we should be watching that Amazon hasn't touched yet, could eventually that we can invest in?
I don't think so. I think online, so, it was interesting. There was a bunch of chatter yesterday about this Grubhub Yelp deal, okay, right? So Grubhub, the delivery system, and Yelp, the online review system, right? And how everything is being done online. Everyone's online experience is really is just exaggerated to a big extent. And Amazon is taking advantage of that on every front. So, the retail experience is, people aren't doing that anymore. And so I don't see an upside to retail at all. Brick and mortar is expensive. Real estate is high. That's not coming in. Even with all the problems, I don't see that happening. So, and I'm not an analyst, but it just seems to me that Amazon is getting their hands in everything. They've got that puzzle down. It's a perfect scenario. They take care of their customers, and customer comes first. People are going to follow up on that.
And after the close, we're going to get some more retail earnings like L Brands, and we also are going to get the FOMC minutes right before the close. But what happens if there's some dissent? Is that going to stir up the market?
It's hard to know. Those meetings there's so much hair on them. It's like an earnings. It's like an earnings release. Did they lower expectations? How do they do with guidance and whatnot? FOMC meetings can be, and we've seen in the past that if there is dissent, it can affect the marketplace. It's the timing on the release of the information. Maybe some of the other Fed governors will come out and say things after the fact. I don't know. I really want to read that much into it. Fed FOMC minute release days and interest rate days tend to be volatile days because there are people who are postured in ways we don't know, and they're hitting buttons, and the market can go down and up at 2 o'clock, and you may see it happen today. Any way to predict it? Absolutely not.
Okay. Well, thank you so much, Peter. It's always nice having you on the floor and, of course, back from vacay. Thank you so much. Until next time.
See you next week. Thanks. Bye, guys.